you can, mostly for our clients, most of our investments that we manage are put in ETFs, exchange traded funds of indexes and things like that. Very few individual stocks, but you can, diversify away the individual risk of any individual company by owning about 15 or 20 different stocks. But there's, advantages and disadvantages about that, as far as then you have to watch those 15 stocks. But if you're willing to, you don't have to have, because we have people sometimes come in here and show us their portfolio that they've got from somebody else, and they have 100 stocks in there or 50 stocks.
And there's like $1,000 or $500.
You can't keep track of it. You can't keep track of that.
That's not very effective diversification, but you only need 15 to 20. And we'll talk a little bit more about more effective ways to diversify here in a little bit.
But one of the benefits, a big benefit of the stock market or ownership investments in companies, is it's the best historical hedge against inflation. And it just makes sense. So if you think about what inflation is, and that's the biggest risk we all have right now, is this high inflation. You think about what inflation is, it's the rising cost of goods and services. Well, logically, the best A grade and the best hedge is to own the companies who produce and sell the goods and services whose prices are rising. And it's just not just logical, but it's proved itself out in history. When we had super high inflation before, in the late 70s and early 80s, the stock market was by far the best hedge, the best of categories of investments to hedge against that.
And another benefit of the stock market, there's always a trade-off. So the stock market does, yes, have a fair amount of risk, but it also has the highest potential returns of the investments that we're talking about today, or I guess versus bonds. And that's something that's essential when we're thinking about retirement income for people too. If you're going to have to take out, 4 to 5% of your portfolio annually, which is what the average retiree has to take out, they need something that can, one, keep up with inflation, and two, keep up with their withdrawals. And that's something that you basically have to be invested in the stock market in order to do. So let's move on to our second investment vehicle,